Roughly $70 per ounce is where silver keeps running into trouble right now. After 3 separate attempts in the last 48 hours, price has still not been able to stay above that level. That matters because each failed push weakens the upward momentum and increases the chances of a pullback. Over the past week, silver climbed from about $64 to $70, a move of nearly $6, or just over 9%, and moves of that size rarely continue without a pause. In this video, I will show you how repeated failures at $70 are creating pressure underneath price. Then, I will break down how the current structure points to a fast drop if support gives way. And stick with me until the end, because I'm going to explain to you how to identify the exact level that could trigger that move. Right now, the key level holding everything together is 68.20. Silver has bounced off this area multiple times over the last 24 hours, which tells you buyers are still stepping in there. But here is the problem. Each bounce is getting weaker. The last bounce only pushed price up about $1.30 before stalling again near 70. When upward pushes get smaller like that, it usually means buying strength is fading. At the same time, the 4-hour chart shows price sitting about $3.80 above its 20-period average near 66.40, which is a stretched position. Historically, when silver trades more than $3.50 above that line, it tends to pull back within 2 to 3 days in most cases. I need to pause for a brief moment. If you're benefiting from this information and want to stay ahead of this before everyone else catches on, hit subscribe. I expose signals in silver before they go mainstream. Now, look at what is happening from a momentum standpoint. The relative strength index is currently sitting near 72, which is above the level where price often begins to slow down. The last 3 times RSI moved above 70 on this time frame, silver dropped between $4 and $6 within the next few days. That is not random. It is a pattern that shows up when price climbs too far too fast. Combine that with the repeated failures at $70, and you have a situation where upside is being capped, while downside risk is building. There is also a clear range forming between $68.20 support and $70 resistance, which creates a tight window of less than $2. When price gets squeezed into a narrow range like this after a strong move, the next move tends to be sharp. If silver breaks below $68.20 with conviction, the next level to watch is $65.50, which lines up with the previous breakout zone. That would represent a drop of about $2.50 to $3 from current levels, and moves like that can happen quickly once support gives way. On the other side, for this trend to continue higher, silver needs to break above $70.50 and stay there. A quick move above $70 that immediately falls back down does not count. It needs to hold. Without that, every attempt higher is just another failed push that adds pressure to the downside. The bigger picture is about timing. Silver may still have a path higher over time, but right now, the data shows a market that is stretched, struggling at a key level, and losing strength with each attempt upward. When those conditions line up, it usually does not resolve with a slow drift. It resolves with a fast move.